Trying to figure out if Michael Phelps owing $55,000 in taxes. And you're saying that's on the low end, Ted Jenkin, Oxygen Financial?
Well, that $55,000 is actually at the high end if he gets taxed on all 5 medals from his winnings and he pays the top rate of 39.6%. Then he might pay that high an amount. But I really don't know all of the income he earns, although with a $55 million net worth, he probably is going to be in that high bracket.
So what if somebody, just anybody, goes and how did they get screwed? How does the everyday Joe, who buys something, whether, they go to a garage sale or they do an investment, how does the everyday Joe get screwed like maybe some of these Olympians might get screwed by not paying these taxes?
Well, the big thing is a lot of people don't realize if you buy something and you hold it for a while and then you eventually sell it, you're supposed to report it and pay tax, right?
Wait, even if you pay taxes on it in the first place?
Well, sure. If you
got to pay taxes again?
Let's say you were a collector of WWE dolls, and those dolls are worth,
Well, great. Thank you for laying that on me.
Army tank stuff, something like
cool.
that.
Yeah, how about Army men? Vintage Army men.
Vintage Army men, and you buy them for $300. Then one day you decide to sell them to Jason. You sell them for $3,000 because they go up in value.
Yeah.
You're supposed to pay tax on that difference of what it is that you sell.
Nobody ever told me that.
So there are a lot of people, Jason, today that put something up on Etsy or their regular sellers on eBay, and they think, I'm just selling some stuff to somebody else. I don't owe anything. And then years later, the IRS may come back. When I say may, they may not audit you, but they may come back and say, "Where's our tax on what you sold?"
All right, so this is like a really trendy thing right now. With the Etsy, especially with the Star Wars action figures when the movie just came out, everybody was going in their closet and they're selling them and they're profiting off of them. So every single person that's selling something vintage, whether it be an action figure, an army man, or they're making something, they're redoing furniture and they're selling it. I see that all the time online. They're supposed to be paying taxes on that.
You should.
Okay, now
wait, you should.
They're not, most likely. So what's the probability? What are the odds that they're going to get caught?
It's hard to say. There's random audits that will just come about just because the IRS does random audits. But, if you come to any significant level of income that you're making in there and you don't report it and eventually they figure out that you're making money, it might be a 1 in 20 odds that you're going to get audited, but it's possible.
You're red flagged over a certain amount. What would you say that amount break is with IRS? Is like, where's this money coming from? What's the line? Is somebody making 10 or 15 grand on the side?
Probably not. It's got to get to be a little bit higher.
Is it 6 digits?
No, I don't think it'll be quite six digits, but you start to get up to $40,000, $50,000, $60,000. It's something significant, or you're very visible. But the IRS has got a lot of things to track down right now, so they're not tracking down the average Etsy person that sells $3,000 of homemade belt clips that they're making at their house.
What if you got a company and you sell things on the line?
Well, it's actually a bigger problem if you have a company and it's not cash, because if you have that company and the company continually shows a loss, the IRS may say, hey, wait, Jason, is this really a business or is this a hobby?
Yeah.
And so if you lose money in 3 out of 5 years, the IRS could say, hey, this is not a business. This is just a hobby. And so, by the way, all these tax deductions you took, you can't take them.
And when you say $40,000, $50,000, $60,000, even though that's a good chunk of change, that's a salary. That's a salary for a lot of people. Mm-hmm. And it's not far-fetched to get there. At least in my experience, what I've seen is the number one occupation where people get hit is the club DJ. I've had a lot, obviously in this business, and you befriend a lot of these guys, and they go out there and they work and they get money under the table, and they don't know if that bar is reporting it or not.
Let me tell you.
Then they get hit, and then they find out in 5 years that they owe, $100,000 to the IRS.
Well, I'll tell you another huge one that I've seen here in Atlanta, because this is a big relo area. People come here and they get jobs and they move from another job. If you got stock or stock options in another state, let's say you worked in New York or you worked in California, then you moved to Georgia. You're at the same company even. It's where you got the stock. That's where you have to report the taxes when you sell it, not when you sell it when you're in the state. So if you got something a couple of years ago in California, California, and those options were from 2010, and then you sell them now that you're in Georgia. That actually the state tax on those options are in California, not in Georgia. And I've seen the IRS or the states come back for big money on people.
There's not a damn person listening to this show right now that knew that.
No, I'm telling you. Telling you, not only know people just report it. They think, oh, I live in Georgia. I sold them here. This is where I pay tax. It isn't that way. And if the state finds out, you could owe money.
What if you got a site coming out, say called yeahcomeon.com, and you're going to sell stuff out of your closet, stuff that doesn't mean anything to you, but you've been given, or things that you purchased, maybe were signed. Do you have to pay taxes on that?
What do you mean? Like if you have a sign?
Say you got a bat from the Atlanta Braves, Marquise Grissom, and you're like, I like Marquise. He went to Fayette County High, but you know what? I can part with this bat.
No, if you're selling it in a business with the intent to make a profit, you're going to have to report it. You're going to owe taxes.
Of course you do.
What about some of my old blue jeans? I mean, what about somebody's old blue jeans?
You're selling your old blue jeans?
Like if you had really brand new blue jeans and you didn't wear them.
Somebody's going to buy your old blue jeans?
You only wore them once or twice and they're really nice.
Didn't you make fun of somebody for doing this exact same thing at one time?
Maybe.
Thank you.
Maybe. I don't use coupon. I'm just trying to sell some stuff. But
like an old Seven Diamond shirt?
I bought it and I paid taxes, Ted. I bought it and I paid taxes.
It doesn't matter. I mean, you could go out and buy a jersey from somebody and you pay $300 for it. Or maybe you bought baseball cards, you bought stamps or coins, and then one day you decide to resell it. Look, the reality is there's a lot of people that deal in cash. And when you deal in cash, you're still supposed to report it, although a lot of people probably don't.
Oh, no, that's my next question for you. So a lot of people, I know that listening to us, they do deal in cash. They've got jobs where it's under the table. They think it's free and clear. But the business that's paying them under the table, do they report it? And is that how they could possibly get popped down the road?
Look, nobody's ever not supposed to report it. So the business that's paying the cash should still say that they're paying the cash, and the person who's receiving it should still claim that they're receiving it. This goes for people that are, bartenders, now mixologists or cosmetologists that get those tips. Those people are supposed to report that. But we know, in a cash society, there are a lot of business owners that they don't.
See, that's the thing. Yeah, we always reported ours where I work, but they had a system set up for it. And I think it's like 8%, but you're right. Most people don't.
Well, if you're not reporting it and the business is, I think what the rule of thumb is if you give that person your social security number, they're reporting it. I mean, that's why they need, it's not because they like all those digits. They're doing it because they don't want to get hit with it later down the road because they have to show where that money went. So I would hate to see somebody, that's doing construction or working in the service industry or selling off your old Star Wars action figures get hit. And then 5 years from now, nobody's got $100,000 just to give to the IRS when you should have been paying $20,000 in taxes.
That's painful because not only if you did owe it, not only do you owe it, but then you've got penalties and interest. And if you don't pay that over a sustained number of years, in some cases, the penalties and interest can be more than the actual tax that you should have paid to begin with. Now, how about gambling as well? Gambling is a big thing people don't report either.
Well, they take your taxes right then and there.
That's what I thought. So when they give you the money and you win big at a club, they tax it right then and there before they give you the money.
Right. That rule changed some years ago. If it's over a specific amount of money, which isn't that high.
Yeah, I think it's $600 or $1,000. It's somewhere in that number.
It's a little bit more than that. It's a little bit more than that. I mean, you can walk away with, and it also depends on the game too. It's usually like the slot machines, the big wins, or you hit a high hand or something. You win a tournament, like a poker tournament. They'll take the taxes out there. But if you're sitting at a table game and you go on a heater and you walk away with $5,000, they're not going to. I've seen it happen. I haven't seen them tax you.
Now you can still match the losses against your winnings. That's what a lot of people don't know is that if you make
up to a limit.
Yeah, well, up to whatever it is that you win. You can't take gambling losses, but if you made $3,000 and then you lost $3,000 somewhere, you can match it against it. And sometimes now we're in fantasy football season. Look, there isn't going to be a Las Vegas that's going to take taxes or one of these casinos out of your money. Some of these leagues are for thousands of dollars. And so cash is going to exchange hands. Technically, those are, gambling winnings.
You know what? A lot of these gambling, the cards, the Players Club cards, like the big one is Total Rewards, for the Caesars properties, Harris, stores like up in Cherokee and Murphy and whatnot. On their website, when you log in and register, there's a section for total rewards that will show your winnings and losses. And at the end of the year, you can print out for your taxes.
Oh, that's nice.
To make it easy.
That really helps somebody. You can just see.
Or painful for others to figure out how much money you
that's
blew.
what I mean.
Most people, it's a loss.
There's Junior's college money. Oh, there's my wife's new car. That's where it went.
I found in all my years of seeing people go to Vegas that pretty much everyone says that they break even, which is sort of the code word for lose. You know, if you meet somebody that went to Vegas and they say, "How'd you do?" They go, I broke even." Okay, you lost money.
You lost.
No. This is how you justify it. Well, you know what?
Everybody loses. Yeah.
No. This is how you justify it. You go, no. The hotel I got for free. I didn't pay for my drinks.
It's a wonderful vacation.
I know a buddy who hooked us up with dinner, and then you start adding all those different things up, and you're like, I'm down like 150.
Yeah.
That's how you do it. I'll have the same story. I'm gambling this weekend. Friday night. You know what? I had a friend, got a free steak. That kind of thing. All right, Ted Jenkin, Oxygen Financial. How can people find you?
Hey, if you want to get a copy of my book, this is something that could change your life today. Go to oxygenfinancial.net. Get our book right now on 100 smart money moves you can make right now, including some really awesome tax deductions. Go to oxygenfinancial.net, and our staff will send you out a copy of my book.
God, I'd love to meet somebody that got taxed by the, got busted by the IRS for selling Star Wars action figures. That would suck. It's like they get you out of a hole, and you're like, man, I had $5,000 worth of these old action figures, and I was able to, get back on my feet. And then 2 years later, I was audited.
I'm glad we talked. I'll tax my jeans now. I will. I wasn't gonna, but I'm going to.
I'm glad you can do it the right way.
I'm glad I'll do it the right way. Thank you.
All right, Brandy, what do we have for headlines here next?
We have another pair of tickets to see Kevin Kinney from Driving and Crying, and lots of special guests tonight. City Winery tickets and more info, citywinery.com.
All right, two big stories from today.